All right, G members, what you have in front of you, this is continuing off the average true range uh, text that you should have read before you get to this video. In front of you is the strategy vault uh, range. And what I've done is I have changed the candles to a line chart, and the blue is just the default color on TradingView for a line chart. What I wanted you to see, the reason I took out the candles, because I want you to pay attention to the range. This is the strategy vault range. It is calculated, and the calculations are set up uh, in the first video. When you set up your charts, all them inputs that we have you put in are what calculates this range. So as you can see, the blue line here would be your candles, or its price action. So as you can see, it ranges from one level of the range to the next, and it gives you a direction. So we know that if our candles are in the upper part, uh, also the red to green, as you can see, it turns green when price breaks the mid level and opens in the upper level of the range. So this line here is very important. As long as we have a green line and it's not a flat line like that, and we have some direction, then we know that price is moving up. Now this is a 5-minute chart. Let's go ahead. We'll change this to a Oh, well, let's look at an hour chart and see how this looks. It's probably going to look where did it go? All right, go here to auto. Okay, so on an hour chart, as we can see, price is above in the upper level of the range. And actually, let me see if I can move this over a little bit so we can just get an idea how big that range is. Okay, so we have our scale over here. Um, we're going to go from just the top of the range here to the bottom of the range. So the top of the range is approximately 7116, and then we're going to go to the bottom of the range, and that is approximately 7063. So roughly 50 uh, pips, 50 points between the low of the range and the upper range. Now, like I said, our formula calculates due to deviation levels, and this is an hour chart, so that's a lot. That's a big range for us to be trading in. Not only the type of trading that we do, which is against the clock. I just wanted you to see the range due to the calculations that our program prints. So now, normally we like to use the 5-minute or the 15-minute chart. Let's go back there. As you can see, this is much easier to read. We have our ranges. We can see our ranges. We can see what price is doing. But this is the SV range level, which pulls off a deviation levels and the ATR of the day due to our calculations. So that's just for your understanding. I just want you to understand how that works, what you're looking at. Once again, flat line, markets losing momentum to the downside. Flat line at the top, markets losing momentum to the upside. Very easy to see, very easy to understand. Long flat line, major drop. As you can see over here, this is the end of the day. Market loses all momentum and all volume. So that's a pretty small range. It really shrinks down. So with that being said, mid-level of the range is what this line is. Mid-level of the range. So just another indication of what price is doing, what price is action. And of course, as you can see, if you received an SV buy here, which means that the candle uh, broke the upper range, which would have been, it broke it here. The previous high of the range would have been right there at the top of the cloud, the green cloud. So we got our break of the range, and then price continues to go up. So I just want you to understand SV ranges and what you're seeing in front of you, the notifications, how they're generated. Also, flatline. Pay attention to the flatline. Flatline tells you a story. So with that, it's fairly simple. So now we'll move on to the next lesson.